Well, going into the election, there seem to be two main points of policy difference for corporate Australia. Labor with its national broadband network and a new mining tax, and the Coalition without that tax but with a big levy on big business for its parental leave plan, and no NBN. The hung parliament now throws up a whole new set of possibilities, but bold sweeping reform doesn't seem to be one of them. In a moment I'll speak to the President of the Business Council of Australia, Graham Bradley, but first Neil Woolrich takes a look at what the impact might be on markets and the economy.
The people have spoken, but it's going to take a little while to determine exactly what they've said. And that is where we find ourselves tonight.
We do not have a clear result from tonight, and I want to say that until a clear result has emerged from this election, that the caretaker conventions under which the government has been operating for the last 5 weeks must continue.
Investors don't like uncertainty, so local traders might be ducking for cover as the market tries to figure out what to make of Australia's political stalemate.
Yes, I think there would be certainly a negative reaction from overseas on a hung parliament, and certainly with the Greens holding the balance of power, there'll be a knee-jerk reaction, probably some selling of the Australian dollar.
The undecided ballot comes at a time when fear abounds in foreign markets and domestic activity remains fragile in many sectors. Against that backdrop, both of the major parties have promised to turn around a $40 billion budget deficit by 2013. While many pundits are tipping the Australian economy to rebound over the next 2 years, the third year of this electoral cycle could present more headwinds.
By that time, we think the housing activity data will actually be moving back the other way, subtracting from growth to some degree through the course of 2011 and the early part of 2012. The strength that we're seeing in terms of the pickup in growth via business investment will start to taper out, we think.
Goldman Sachs chief economist Tim Toohey says the pledge by both major parties to return the budget to surplus should be achievable, provided they don't embark on big spending initiatives. But he says the old problem of Australia's two-speed economy will re-emerge and put pressure on the faster-growing mining states of Western Australia and Queensland.
It'll certainly, I think, buffer up and certainly tighten the labour market conditions in those areas. But also I think just that broader competition for resources will probably impede what the state and federal governments want to do in those areas themselves in terms of infrastructure layout. So there'll be real competition for resources, I think.
One possible threat to national income is the terms of trade, a ratio of export prices to import prices. The index remains near record highs, largely driven by strong commodity prices. But some analysts are forecasting substantial falls in those prices, which would cut company profits and make it harder for the government to return the budget to surplus.
The world is effectively short metallurgical coal and copper, we believe. So in that sort of a context, we think that the commodity price declines that are to come perhaps won't be dramatic, but we still would caution that you should very much expect that commodity prices start to normalise on a 2, 3, 4, 5 year view.
Despite some concerns about long-term commodity prices, mining is expected to remain Australia's strong suit for the next 3 years. Labor's mineral resource rent tax now looks highly unlikely, but in any event, Ivor Rees from EL&C Baillieu says a stronger Australian dollar is likely to be the main worry ahead.
Since the compromise has been reached, certainly there's been an increased willingness from foreigners to invest. Now, there's greater certainty. Really, we see the big issues as being currency. If the Australian dollar were to remain strong and to keep strengthening over the next 12 months, that would certainly hurt a lot of projects.
And while investors might initially be troubled by political uncertainty, Australia may be entering a period of policy paralysis, which somewhat perversely might not be a bad thing for business.
So I think they would quite welcome the idea that if we move into an era where policy be more gradual in its implementation, certainly more debated, then policy will be more drawn out. I think that will give investors some degree of confidence.
The other industry with much at stake from the election outcome is telecommunications. The Liberal Party has pledged to scrap the national broadband network, but the key independents who will decide which party forms government are all NBN supporters, meaning the plan might not be dead yet.
It's already extremely competitive, and the NBN will make it more competitive than it has been. We'll certainly see a lot of bundled prices, household and SME bundles will continue to come down in price.
And while that could put more pressure on Telstra's profits, the company would at least have certainty and could plan for the future. For Australia's telcos and others in the retail space, the key now is to hope that consumers will at long last loosen their purse strings.
Really, the main point of weakness in the Australian economy has been the consumer over the last year. They've been fairly conservative in the way they've spent, so really what we need is the economy to settle down a bit, a little bit of the sense of the crisis to dissipate, and if the consumers come back, the Australian economy will be growing just fine next year.
But if the past 3 years are any guide, whoever takes control of the nation's finances could still face some testing times ahead.